Okay, talking about annuities yet again. This is the purpose of this channel, is to help you as an insurance agent or a financial advisor learn more about annuities and how to position them and how they can actually benefit people greatly. In today's talk, I'm going to be sharing about SPIAs, okay? Single Premium Immediate Annuity. What's the purpose of an annuity? It's lifetime income. What is a SPIA? The simplest form of income you can get from an insurance company. You give them some money, they hold on to it, they promise to pay you back. That's it. That's all it is. And then when all that money's gone, they promise to keep on paying, a paycheck for life. Now, a lot of people are negative about SPIAs. If you look at the negative connotation in the news all around annuities, they're generally talking about SPIAs or DIAs, deferred income annuities, and also variable annuities. These are whole other topics. We're not getting down that rabbit hole today. Just focusing on the SPIA. The SPIA is simple. You give an insurance company money, they have different options. Maybe it's a period certain. So it's a 5-year period certain, 10-year period certain, 20-year period certain with lifetime option. There's different rules and classifications of these SPIAs. Some of them, they give the client the opportunity to have a refund, cash out refund essentially, option where if they die, the insurance company is not hanging on to all the money, but rather whatever's left over, dollar for dollar, goes back to the family members, okay, or the surviving spouse if they don't do a joint option. So SPIAs are not bad. Are they that popular today? Not really, because the evolution of the annuities with the fixed index and the income rider on it, that's usually way more favorable. There's a lot more options. They can pay lower income, though, than a SPIA, but it's a trade-off for the flexibility and the benefits. But SPIAs are still relevant. Sometimes if somebody's a lot older, a SPIA can work out well. Maybe they're trying to purchase a piece of property, or they need extra income for a business reason and they have disposable cash. They can create a SPIA. Maybe it's a 5-year or a 10-year payback period, and then that can help them qualify for different types of loans. There's a lot of unique ways that you can structure a SPIA. So they're not bad. Don't talk negative necessarily about certain annuities until you fully understand them and you have a good comparison model. Now, the DIA is a deferred income annuity. Pretty much the same thing as a SPIA. The difference is that SPIA is single premium immediate annuity. So you're generally turning on income after 30 days or within the first 12 months. Okay, that's usually when the SPIA is most applicable. The deferred income annuity, you can literally park it there and let it sit for a number of years and then turn on income. Now you got to be cautious on a lot of these plans. Sometimes they make you pick a specific date in the future and you can't change it. It is what it is. It's going to turn on income. The other thing that you have to realize is that these are annuitized products. What do you mean by that? Well, every annuity contract that you read will have the word annuitization in it. And what that means is when you go to turn on income, they're going to turn on the income, but you forgo your access to that principal. You can't say, hey, I'm going to turn on income and emergency popped up, I need $5,000. No, it's not going to happen. In fact, most of these contracts, if you purchase them and you go past your free look period, either 10 or 30 days, or maybe it's different depending on the state that you're in, you cannot change your mind. That's it. You are in it to win it. There's no liquidity features. That is it. You've made your decision. So that's why a lot of people don't really care for the SPIAs or the DIAs and why we're not big fans of them, because life changes, things happen. Maybe they want to turn on income at a different time frame. Maybe they need to cancel the policy in the future for whatever reason. Maybe they pass away prematurely and they want to be able to give even more than what their original principal amount was. And you can have all these features without annuitization on a fixed or index annuity. And the reason for that is it's not actually annuitizing the contract. With an income rider, so in the world of insurance, rider means extra. With an income rider, you are not annuitizing that contract. Now you could, it's in the contract, it'll actually read there, hey, here's your annuitizations options. Or if you ran illustrations or if you've reviewed illustrations, you'll see the word annuitization in there in a schedule. It's just not popular. Nobody's going to choose that when they can just exercise the income rider. But the income rider allows for lifetime income, very similar to the SPIA and the DIA. The difference is it's not annuitizing. Now, there's also a fee with those. Most carriers have an income rider fee if you want anything competitive. Most of the SPIAs or the DIAs, there are no fees. You just park it in there. It's a contract with the insurance company, one and done. You move on. It's clean and simple. Annual reviews are very straightforward because it's like you already have this policy. On the index annuity, you have an opportunity to receive interest. You can have partial access to the money. There's a lot of liquidity features on some of these. Maybe they only want to hold it for 7 years or 10 years. And an emergency happens, they can get back that money. They pass away. Their spouse can continue receiving income, or their kids can get whatever's left over. But it has an opportunity on most of these to actually receive some interest in the contract while it's sitting there, and even while it's receiving income. You can also do partial Roth conversions with a lot of these before you actually turn on the income. So there's a lot of unique features on the index annuity with a rider or a fixed annuity with a rider, more than what you're going to get with a SPIA or DIA. But every annuity has its time and it has its place, okay? So don't say, oh, you don't want a SPIA. And then the first thing I ask agents or even consumers, I go, well, why not? Tell me about how it works. And they have no idea. And if you are going to sell a SPIA or DIA, be very clear on the contract. Make sure you understand the period certains, the lifetime cash refund options, single, joint. You have to understand all that to become educated and better positioned for yourself and your career, but also to help your clients make the best decision possible that they can. Again, as always, I like to keep these videos short. Nobody wants to watch a 4-hour overview on SPIAs or DIAs. Do your own research, okay? Don't just take it from me. Do some Googling. Use AI. Search for it. Read about it. I know it takes time, energy, and effort, and that's scary for a lot of people, but you need to do this. I mean, these are big decisions. I mean, think of it. You're helping people reposition the majority or a good portion of their entire life savings. Don't you want to be 100% confident that it's the right decision? And if you're a consumer watching this, don't you want to be 100% confident that that agent or that advisor is giving you the best advice? Do some preliminary research. If you have any questions, drop them in the comments below. I'll be sure to watch for that. Thanks so much, and we will see you next time.